Hey, Mike here. I want to do a quick video update about the stock market and what I think is going on here for the next couple weeks. You know, we've been pulling back so far this month in December, which is really no surprise because if you look at it, the S&P went from 1650 to 1800 without any significant pullback at all. And in fact, around here, sentiment was getting skewed to the overly bullish side. The market was overbought. But instead of pulling back like it did in September, in July, in the spring, or even in April, it simply paused, had one down day, popped up, and then boom, broke out and went up for the rest of November. Well, historically, the stock market tends to rally into the end of the year, but has some sort of dip or pullback in the first week of December. And with the market going into this month overbought, well, it's no shocker, here's the pullback. Now, the market could fall a little bit more. It wouldn't shock me if that happened. It wouldn't shock me if it doesn't really turn around and start to rally strongly until December the 18th, because that is the next Federal Reserve meeting day, in which they'll issue an interest rate statement. And there's even speculation, which I think is unwarranted, on CNBC, because they need something to talk about, frankly, that they'll do tapering again. Well, they never did tapering in the first place. Remember, in September, in August, that was the fear, and it never happened. I don't think it'll probably happen here either. But that's what they're talking about, and they're using that thought as a reason to explain this little pullback in the market. Well, the reason is simple. The market is overbought, and markets do not go up, 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 and up every single day, so here we are. Now, what is the potential downside? You know, I think very likely, even though I'm saying I don't think it'll go up significantly, probably until the 18th or somewhere around that time. I don't really think there's very much downside either, and the reason is the VIX has already jumped up the past week pretty sharply, and it's got resistance now at 18, which is the upper 200-day Bollinger Band. You can see when it's broken through that level, it's quickly reversed, and it's been doing that for the past couple years. The VIX, if you don't know, measures the fear in the options market because it's measuring the premium that options traders are paying for puts. People buy the puts as hedges against their positions, and when they get frightened on pullbacks, which they tend to do at bottoms, they panic and spike the volatility premium up. So these spikes tend to coincide with critical bottoms in the market, and you can see October, you can see June, you can see December, which was the big, which made for great buy points. What this means is that if the market were to just pull back and dump, this would spike up very quickly. So, you know, a move to 1750 on the 50, which is the 50-day moving average, would frankly, you know, cause a panic drop in the VIX, or panic spike in the VIX. So, you know, I really see that as the potential downside. I don't even think we're going to get to that. In other words, you're talking about a 40-point drop about the S&P 500 is the max. 400 or 500 points in the Dow is the max that could occur over the next couple weeks, and is likely not to happen. More likely is that we'll make some sort of low fairly soon, and just simply, you know, base out a little bit, not really do much, then break out into the end of the year. So that's what I'm looking for this month in the S&P 500. That said, I do think that next year we are going to see some sort of significant pullback, something like we saw in May and June, or last year September to October, somewhere like a 7 to 10% pullback in the stock market for the United States, because we haven't seen something like that for quite some time, and they typically happen once or twice a year. And once this move that's been going on since June comes to an end, I think that's going to happen sometime next year. So I think we can ride out. The way to play this is sometime between, you know, now and 18th. The next 2 weeks is a good time to do some buying, to play a short-term end-of-the-year rally, and then be a little bit more cautious once January comes, to prepare the way for a great buy point to take advantage of a dip sometime next year. So that's what I think we can look forward to there. And I want to talk about gold. And gold, made this huge. Gold was in a bear market from 2011, crashed in 2013 to make what I think is a bear market bottom crash, collapse. Two of them took place, and we bottomed in the very beginning of July, jumped up, now we've come back down. Gold stock's been trading weak past few weeks. Yesterday there was a nice up day in gold, and the gold stocks are up substantially across the board. So what's happening in gold is I think that we're likely to see gold trade up too, and the gold stocks trade up too for an end of the year rally. We could see gold go up to 1,300 or 1,350, but I think what we're seeing is gold in a stage 1 base that is the prelude to what will become a massive bull market. In fact, almost every single market in the world is in a stock market right now, is in a bull market, and gold and commodities is about the only thing that is in a stage 1 base. And I think that base will end sometime in the first couple of months of next year, and we'll see gold stocks, commodities break out of the base and launch a new bull market. Well, what does this mean for the action here is I think we're going to see, some turn up here in gold stocks for an end of the year rally. I don't know when the turn will take place. It could begin today. It could begin within the next few 10 trading sessions, sometime between now and the 18th. I really don't think there's much more downside though. But let's fit this in with what I think is likely in the S&P 500. Again, a pivot point, an end of the year rally, sometime in the first quarter, a peak, end of this move, and a 7 to 10% correction. What I think that means we're seeing gold is a bounce back up along with the United States stock market. But then most likely as the United States market has that 7 to 10% correction next year, I think gold commodities will pretty much hold up and then shows powerful relative strength in regards to the rest of the stock market. And I'd position it for the critical breakout through what will be a stage 1 base being completed, and will signal the start of the next bull market. So I think what that means is, if you want to buy some now, you can, but I think the really, 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 really great buy point will come sometime in the next quarter, the first couple months, at some point next year when there is a pullback in the United States stock market. And I also think that we're going to see a relative strength also shift into the global markets, into Europe and some select markets over the world, out of the United States stock market too, in the next couple of weeks, as that's been frankly what has been occurring over the past years, that leadership will go in the United States, then when the U.S. weekends, it shifts into other markets, and I think we're about that at that moment too. So what am I doing? I'm 87% invested in the United States stock market. I'm likely to do a little bit more buying myself at some point, probably the next week or two, to participate more in an end of the year rally. And then sometime in January, I'm probably going to look at some of my positions and trim some stuff or add money to my account, do something to position myself for what I think will be a nice pullback at some point in the first couple of months of next year. And I'm likely, I'm not sure what I'm going to buy personally. I'm going to talk more about that in Power Investor Reports, update my watch list, look at some of the stock picks I put out in the report on Sunday and so forth, and keep you up to date in the Power Investor Members section on what exactly I'm doing with my money and what I'm looking at and researching in PDF reports and on with more updates. But I wanted to give you an idea of what I think is going on now in the stock markets this morning, because I'm getting lots of emails about gold, a lot of emails about the S&P 500 and the pullback the last couple of days, and emails questioning about this taper talk. And I want to tell you what I really think too as I end today's update. With this taper talk that's going on, I think it's a myth. In fact, I think if the stock market does pull back 7 to 10% next year, that there's a good chance that we're going to see Obama and Janet Yellen increase quantitative easing and not cut it in fear. And if they do that, you're going to see that be a catalyst that will change the entire game when it comes to gold and commodities. You're going to see that launch a massive bull market in both. And I just think that any pullback in the stock market is going to terrify the people that are acting as mouthpieces for Wall Street interests and are committed to seeing the stock market continue higher, are fearful of higher interest rates, and are willing to sacrifice the U.S. dollar, I believe, in the long run to achieve that, because they know when push comes to shove, they're going to have to do something, and I think that's what they're going to end up doing in the future. So I'm not a believer in taper talk at all. I just think that's something that they're using on TV to explain pullbacks in the stock market when they occur, and they don't really have much understanding of the situation that the monetary system is in, because they just trust the Federal Reserve statements and don't think critically about what is happening. People like Steve Leisman on CNBC, he has never ever done any critical analysis of the economy. He never forecasted in 2008. He never foresaw what was going to happen to the banking system. He kept saying everything was fine, because all he does is read the statements of government officials and never thinks for himself and parrots that talk, because that's all he is a parrot. And you've got to think critically for yourself about what is going on. If you just trust people like him, you're going to eventually one day end up in a tough situation again. But right now, there's really nothing to fear. There's just a little pullback. And even next year, I'm talking about a 7 to 10% correction at some point. That's nothing to be scared of. That's a natural thing for bull markets. We've seen them occur in almost every year of this bull market since 2009. And, the real time to be scared will be a couple years from now, because all bull markets do come to an end one day, but there's a sign of that happening, and that means we're in a global bull market, and the key is to buy on dips in the best markets in the world with the best stocks you can find in the best sectors you can find. Hold your core positions and just manage on the edge of that and get yourself in a position so you can add on periodically from time to time to take advantage of the dips. Right now, I know everyone wants to pay attention to the short-term action. They want to know what's going on day by day by day. Well, we're dipping this far in December, and that dip is just a little short-term affair. It's not even a couple percent, and you get an end-of-the-year rally, which will be a happy time, and that's the thing to focus on right now. Isn't today's or yesterday's pullback, but the end-of-the-year rally that's coming. So that's a lot for today, and I'll be talking to you later.